What is the best way to pay off your credit card debt? Most people think that buying another credit card will help pay off those bills, but they typically only make the problem worse. So, read on to learn more about the best ways to pay off your credit card debt. If you are like most people, you have credit card debt. The average US household, for instance, has more than 0.000 in credit card debt. Successfully paying off your credit card debt requires a hands-on approach, from determining your best payment strategy to contacting creditors to negotiate rates. Are you looking to settle your debt? There are a lot of smart ways to become debt-free once again. The key is to be more informed about some of your options before you go out and do something rash. If rash decisions are made, then that will only increase the debt you already have piling up. So, here are 5 solutions that will help you improve those credit scores once more. Did you know getting a personal loan doesn't require putting down collateral? That means you don't have to risk losing your house or vehicle to get personal loans to help pay off your credit card debt. Of course, this means you still need to have a good enough credit score to ensure you get it. You might also need to have someone reliable enough to co-sign with you when you apply for a personal loan. Since you don't have to use any collateral in case you don't pay on time, having a co-signer will help increase your chances of getting your application approved. So, why use a personal loan for credit card debt? Personal loans have lower interest rates than credit cards, which means you can easily pay off your credit card debt. As a result, you won't be stuck with a higher rate and save money in the long run. The credit card offers from different banks and stores can entice people to buy more and more credit cards. You might take it too far and get far too many of them, then you can't financially keep up with. However, all is not lost if this happens to you. This is where the debt is. You don't want to pay off your credit card bills from the smallest debt like in the debt snowball method. You might prefer the avalanche method. This option is when you save a large sum of money each month to pay off those high interest rate credit card bills. Meanwhile, you should still be paying the minimum amount on the rest of your credit card bills. You need to continue paying all of your bills on time, so your credit score doesn't suffer. After you pay off that first credit card, it can be a little easier each time to pay off the next highest interest rate credit card debt, and you will have a lot left over. A balance transfer might be an option for you if you have a high balance on your credit card with the highest interest rate. This option enables you to pay off some of those balances from your credit card account by switching your account over to a new one. Substituting or switching your account to a new one will also allow you to take advantage of the lower rate. This would happen during the introductory period. This means when you choose this option, then you will be able to save the money during that period. Also, transferring to another account that has a lower interest rate can be very beneficial in the long run. You won't be adding up those interest rates like you would with the previous credit card account. Debt settlement might not be for everyone. If you have a substantial amount of money to owe, you might be able to settle with the creditor. This is known as a debt settlement company, and discussing a debt settlement can help. This means you only have to pay one significant amount of money. This is paid all at once in an amount that represents your total debt. The amount has to be high enough to satisfy their terms. This is due to you paying a big chunk of your money all at one time. This is why they might not care that they aren't getting the full amount. With this being, most creditors will agree on you paying them 50% or less than the amount you owe them. However, this might only apply to those who have had a significant change in their life, such as divorce. If you haven't had a substantial change like this, they might not agree. It can also depend on the creditor you owe the money to as well. We all have student loans, credit card bills, and other financial struggles. This all impedes on our lives on a daily basis. Paying your monthly payments on time, getting those credit cards paid off, and using them wisely in the future are all things you might want to consider doing. Don't go back to those more bad choices that will have you getting into deeper debt and decrease your credit score far too much. So, act now and make some smarter financial choices that will help you climb out of debt and allow you to increase the balance in your bank account for vacations and for your savings. Thank you for watching. Please subscribe.